John Guarnera is an analyst at Societe Generale, and he joins me now. John, great to have you on the program. Now, tell me a little bit what your thoughts are on U.S. banks. Just a week ago, we were saying, well, you know, they look really risky. Now we're seeing some of the corporate results, some of them better than expected. Does it look like it's going to be a healthier picture?
Yeah, hi, thanks for having me. I think really you have to look through a lot of the noise that's been reported in the earnings season so far. If you take Morgan Stanley's results from this morning, for example, a lot of it was really benefited from a large accounting gain, a debt valuation adjustment due to the movement in their credit spreads. And so if you start backing that out, the underlying results actually don't look as healthy as what the headlines would suggest. And so that's one thing that we're really urging investors to try to take a look at as they factor that into their valuations.
And in terms of what you think, John, going to the future, I mean, what banks seem to be healthier? We talk a lot about the European banks versus the U.S. banks. A lot of the focus has been put on the European banks and say, you know, they really need to recapitalize. They need to also sell off some of the riskier assets. But it's pretty much the same situation in the United States.
Well, it's a little bit different. One of the things to consider is that for a lot of the U.S. names, there's actually fairly de minimis amounts of exposure to the European periphery. And the banks have been fairly good about providing that disclosure this quarter. But overall, their exposure is much less compared to a lot of their European peers. You asked what names appear to be more healthy than others. We really look at a lot of the names that tend to have more core deposit bases and are more stable funding bases versus some of the names that are more wholesale funding oriented. So if you look at the retail banks versus the brokers, specifically thinking names like a Goldman Sachs or Morgan Stanley, while those names do have some small deposit bases, they are not as able to rely on that as a source of stable financing versus names like a Bank of America, a Citigroup, a JP Morgan, a Wells Fargo, where those large deposit bases provide a very stable source of financing, even in volatile markets.
But overall, how will banks be actually affected by the Volcker rule? And does it mean that certain banks will have to drop their status? I'm thinking of Goldman Sachs, but also Morgan Stanley.
Yeah, the outcome of the Volcker rule is really uncertain at this point in time. What we've seen so far is just a draft that's out there for comments. That commentary period ends in January, so it'll be interesting to see how that evolves from what we're seeing right now. There's been a lot of questions about whether a name like Morgan Stanley or Goldman Sachs would be willing to get rid of their bank holding company status. We don't think that that's very likely. The primary reason being that one, being a bank still provides them a very healthy source of potential liquidity, if need be, from the Federal Reserve. The other thing having to be that there's a carve-out in the Volcker rule that basically suggests that non-bank financial companies could still be subject to certain increased regulations. And part of that, so we think that if you saw a name like a Goldman Sachs or Morgan Stanley decide to give up their bank holding company status, that the rules would just shift and that these increased regulations would still affect them.
And overall, if we look at a lot of the figures that have been released, it seems that it is difficult for a lot of these banks to generate top growth. So are we going to continue seeing all these cost cuttings? Are we going to see more job losses?
Yeah, I mean, that's a big focus right now. Banks in general are having a very difficult time growing their revenue basis, and this can be due to a couple of things. Part of it, as you mentioned, is impacts from regulatory changes such as the Volcker rule or the proposed Volcker rule. Some of it is due to pressures on the loan side. So loan growth is very hard to come by, and as a result, you're seeing just a general struggle for revenue growth. So cost cutting is one of the big ways that banks can really help try to benefit their bottom line. So yes, you've seen a number of names announce cost cutting initiatives. We expect this is going to continue to be a very big focus, definitely through 2012.
And John, something that may have come to a surprise to certain analysts and certain viewers as well is that we had some very strong numbers from Goldman Sachs. Bank of America, weak numbers, disappointing, but that stock still rose. Overall, is this going to be a trend of things to come? Is Goldman Sachs going to remain on this trend, or was it just something that was for the last 3 months?
Yeah, look, I think the pressures that we're seeing in the industry are going to be here for a while. They're unrelenting at this point in time. The rally that we've seen both in credit and in equities has left us a little bit surprised, because as you look at the underlying numbers, they're really not that strong. And that's not just a comment on a Morgan Stanley or a Bank of America, but that's the same thing with a Goldman Sachs, which reported numbers yesterday as well.
Is the landscape going to significantly change in terms of the banking landscape over the next 12 months? If I speak to you in December of 2012, are we going to have a radical new banking landscape?
Well, I don't know that we're going to have a radical new shift in the banking landscape. I do think banks are struggling to figure out how they're going to define themselves going forward. That can be in terms of revenue inputs, so what businesses they're going to be able to be in and be in at a profitable basis, and they're also trying to decide how they're going to define themselves given the new Basel III regulations that will step up starting January of 2013. But I don't think overall you're going to see real dramatic shifts in the banking landscape going forward.
All right, John, thank you so much. John Guarnera there from Societe Generale. Thank you for joining us.